When we first started making these videos, our plan was to cover the RW market in general with an emphasis on the stablecoin market, right? But
Yeah.
since then, we have had so many crazy stablecoin developments, and the market has grown so fast that other RW categories didn't really seem so exciting.
Mm-hmm.
Uh, but today, I'm really happy to do this video covering the growth of the RW market in 2025. I will be breaking down the 2025 RW report prepared by Toon and RWXYZ. They have done a phenomenal job with this report, actually. And we'll try to understand where the market is heading. So, are we excited?
Yep. It
All right.
came out yesterday, right?
No, a couple of days before. But
Uh,
I was trying to see if there's anything else, if like how people are looking at it, what the public sentiment is, and so far it's been very positive. I was also like taking a couple of days to research all the
mhm.
projects that they have covered in different categories. So yeah, let's go.
Yep.
There are primarily six categories they have covered. There are U.S. Treasuries, global bonds, private credit, commodities, institutional funds, and public equities, which is stocks basically, stocks
Mhm.
and ETFs, right? So I will go one by one in every single category and try to understand what's happening exactly. And I will also share my screen and uh, follow the report along. Yeah, so this is the US Treasuries overview section, which is the way it has grown over the last few months. It has been pretty much a steady growth. We're looking at 3.4 billion EY to T year to date, which is plus 85%. BlackRock is obviously at the very top. After that, we have Wisdom Tree,
Mhm.
Ondo, Centrifuge, etc. Spark has done pretty well as well with the $1 billion in tokenization. And basically, what are we looking at here? We are also looking at Securitize, Ondo, Wisdom Tree, Franklin Templeton, and Centrifuge. These has been the primary drivers of growth in this category specifically. So just to understand what it means is Franklin Templeton's Benji, they did about they opened up their market to retails with $20 minimum investment.
Mhm.
They also they require KYC. It's multi-chain. They are seeing P2P transfers above 60 million since June. So overall, the way I'm looking at it, the treasury market has really found its place in the RWA category, and
Mhm.
from here on we'll see more and more financial managers getting into this market and investing. I
And why do you think the surge is? Is it because investors are chasing yield, or is it more about the excitement of putting bonds on chain?
Yeah, that's you can look at it from both ways, right?
Mhm.
Is novelty really that such a big factor that people are going to put billions of dollars to play with the system? I don't think so. It's uh it's
Right.
it's not even yield because you are going to get the same amount of yield whether it is on chain or off chain. The primary difference here is the efficiency and the convenience of using an on chain service as opposed to going through your normal exchanges or your other the other fintech app platforms that you have, right? Because those are obviously extremely difficult, unnecessarily complex, takes more time than it actually should, and it should actually be, like a 5-year-old should be able to operate it. Obviously, 5-year-olds are
Right.
not going to invest in
But it's
investment,
much more
but
simpler for
yeah,
them to operate than the
yeah,
new ones.
exactly. And that should be the goal at the same time. Like when we are onboarding this TradFi people to crypto, getting them trying out stable coins and blockchains for the first time. The goal should
Mhm.
be to bring down the complexity as to as much as possible, so that they don't get confused. Like, okay, should I be using this Ethereum L1 or should I be using the Arbitrum L2? What does that even mean? What's the difference? Why do I have why does the same stablecoin USDT or USDC act differently in different blockchains, and why can't I use this stablecoin on that chain? Nobody needs to understand this stuff. If you're in crypto, okay, yeah, sure, that works. But if you're not, most of these complexities should be abstracted away, and that is the USP of this tokenization on chain, right?
Mhm.
So yeah, that's pretty much where US Treasuries are. And then the next category in this report is global bonds. Global bonds is another quite fascinating development that I'm seeing. Obviously, US Treasuries, it's a huge market at $7.3 billion,
Mm-hmm.
but global bonds are also at about $600 million, which is obviously like 10% of it. But
Mm-hmm.
what makes it the most interesting is a couple of things. First of all, Europe is driving the growth mostly. Um, and European investors, European asset managers are not necessarily going with Ethereum. They're going with Polygon. They're going with Arbitra. So that's really interesting to see because Ethereum is obviously the blockchain that you go if security is your primary criteria. But Polygon, Arbitrum, and other L2s is where you have the capital efficiency, where you have the speed, and you have more composability. Let's say you can do more things with it, and it's the opportunities of innovation are higher in these L2s. So like and so to speak, like Spiko's EUTBL, they distributed 3 million euros worth of yields in just year one, which is pretty fascinating stuff. The next category in line is private credit, and this private credit section has actually seen phenomenal growth. They are at $15.9 billion. They have tokenized $15.9 billion worth of private credit, and as you can see, that the leaders here, Figure Technologies, you have Tradable, you have Maple Finance, and all of them are
Mm-hmm.
putting in insane amount of volumes. Uh, and this is an industry that I find fascinating because this wasn't in my radar previously. I didn't really expect it to do that well. Like the lenders and borrowers of private credit have really embraced the promise of tokenization, and they have found this product market fit that I don't think anybody expected, honestly. Like Maple Finance has actually done a phenomenal job with their actually, let me show you here, with their syrup USD pools. Like Maple Finance has about $3.5 billion in the AUM, and $2.5 billion worth of it is in syrup USDC, which is their yield bearing stablecoin, and it's essentially completely integrated with the DeFi world. It's integrated with Spark, Pendle, Morpho. Uh,
Mm-hmm.
so absolutely fascinating stuff. And also like Figure Technologies, they're tokenizing HELOCs. They have done about $2.5 billion worth of HELOCs. HELOCs is home equity line of credit. So it's again essentially mortgage that you take out against your house. So this is something I don't know what kind of growth we can expect. I don't know if this industry is going to go cross $100 billion plus over the next year, but given what we have seen so far, I won't be surprised if it does, especially seeing their interest in actually getting access to DeFi yields, which is, I
And
think,
do you think this growth is like a real shift in how TradFi thinks about permissionless systems?
Could be, but at the same time, with again, like as I said, 15.9 billion is a huge amount, but it's a huge amount in tokenization, from a tokenization point
Terms.
of view, right?
Uh,
It's not a huge amount in the TradFi market. In the TradFi market, anything under like 100 billion, 200 billion isn't really anything. So I will say, at best, these are people who are just tipping their toes in the tokenization world and seeing how everything goes. Now, if they see reliable results, if they see the technology is everything that it's cut out to be, then yeah, absolutely, I feel more and more volume will be coming to privatized credit, tokenized credit, however you want to call it. So yeah, absolutely bullish about it, and we'll see how it goes from here, basically. So yeah, the next category is commodities. Where is commodities?
we are putting a cut.
Yep,
Wait, wait,
yep,
wait.
you've got commodities here. So commodities.
Romeo, I said we are putting a cut. I think that will
Okay.
come in the recording. We can start now.
All right. So the next category is commodities, and obviously commodities means essentially it's single-handedly carried by gold. We are looking at,
Mhm.
you have got Paxos, PaxG, Tethers, XAUT. Uh, quite fascinating stuff happening on the gold-backed block stablecoin side. But I want to actually mention this JSOY oil thing that's at about $300 million asset under management, which is commoditized soybean oil. Like when I
Is
first,
it?
yeah, it is it's soybean oil. Like when I first read that this is oil, I thought like they were talking about pea well or something, but that's not it. It's actually agricultural commodities that are coming, and we are right. Like welcome to the tokenized world. So soybean oil. We'll see where it goes, but it looks pretty interesting.
Okay, this might be a silly question, but do you think they will ever rival gold in importance?
I mean, commodities in general definitely have a place in the overall market, in the overall tokenization market. But the gold's importance is completely different from how other commodities are done. Gold is not treated as a mineral, right? Gold is treated as a store of value. That means,
Ah,
uh, that means like it's a hedge against currency, it's a hedge against market collapse.
right.
When market collapses, some commodities might go up because like something like agricultural products will definitely go up because people have to eat. But at the same time, other industrial materials might go down because society is collapsing. There are very little developments happening, etc., etc. The speculative market around these commodities can be highly, how should I put it, highly volatile, and can be made to look like something that it isn't. But with gold, that's a completely different story. Everyone keeps track of gold very cautiously. Everyone is trading it, dealing with gold in one way or another in their portfolio diversification strategy. But if you're dealing with commodities, that means mostly that your focus is on commodities, and that's what your livelihood is based on. That's what your skill is based on. So completely different categories, I would say, even within commodities.
Right.
So the next category I want to talk about is institutional funds. Institutional funds is another interesting one. They only have a volume of about 1.7 billion, but
Mhm.
it's growing steadily. The year to date surge has this is like 387%, which is crazy, with the centrifuge, securitized, and superstate being the three leading protocols, I would say. Not really a whole lot of things to discuss here, but again, we'll see how it goes. Obviously, this is the first year when companies are really feeling confident with the Genius Act and the
Mhm.
MiCA's stablecoin regulations and RWA regulations, and Hong Kong, China coming into play, etc. So companies are feeling confident, and they will obviously, as time goes, we are going to see like effectively from next year, all of these categories will be well over the $100 billion mark, just in the beginning, and then we'll see how things goes. But what I'm more interested in discussing is actually the next category, which is public equities. So the public equities market is again quite minuscule in comparison with other categories. The tokenized stock is only at about $300 million dollar overall volume.
Mhm.
Retail is coming in. We are seeing that retail is coming in. Ondo started their global markets. They launched 100 plus tokenized US stocks and ETFs, and within like 3 days, they hit $63 million in tokenized
Sheesh.
stock. Yeah, so that's we can clearly see that this volume is actually coming from retail, because and the top trading stocks are obviously you have got Tesla, MicroStrategy, S&P 500, Nvidia, Circle, etc. So this the again of how I see it is, the more you make things easier, the more for people to trade new assets, the higher the volume you will be seeing from the retail world.
Do you think this is where Robinhood on-chain becomes real?
I mean, yeah, absolutely. That's what Robinhood wants to do, right? They want to tokenize. They want to essentially bring their entire offering on chain, and why not?
Mhm.
The blockchain is much more straightforward than whatever order flow mechanism that they are using, right? Uh, and they are not going to have an easy ride of that. Obviously, they are the dominating uh, fintech platform in the US. They have a huge amount of users already. They're actively trading. But the thing to notice here is what are the other platforms doing, and how are the offerings are going to be different, because this is what I found interesting. Actually, I wanted to discuss it a bit later in this episode, but I will just bring it up since you asked the question. Is the way Robinhood is approaching tokenization of stock is actually, I will say, inferior to how Ondo is approaching. So Ondo is working on this directive tokenization method, which is so here's how Robinhood is thinking about tokenizing stock. Robinhood or their subsidiaries own a number of stock, and they own a number of third party stock, and then they are bringing those stock on the platform, and they are tokenizing it. So the liquidity simply isn't there. The spread, the kind of pressure that the order book can handle, is not really that great. If there is a huge sell volume, or if there's a huge buy volume, I don't think Robinhood is going to be able to address that situation seamlessly, and we will be seeing something like the GameStop thing happening all over again. Whereas what Ondo is doing is actually quite smart, and I don't know if this is only limited to Ondo itself. What Ondo has done is they are going to NASDAQ, they are going to New York Stock Exchange and saying, like, hey, what if we create a new source of order flow for you through our blockchain? Like our users will be ordering, our users will be buying and selling their stocks. They will putting in the order, instead of the orders coming from the fintech platforms that you service, it will be coming through this blockchain platform, and you will be serving them just like you would serve any other customer or any other trader. So you will honor their buy orders, you will honor their sell orders, and it just takes place in the blockchain, and that's pretty much it. So there is no third party, there is no middleman who is buying it from someone and selling it to someone, or nothing like that. This is publicly traded stocks, and this is just simply going to be handled directly by the NYSE and the Nasdaq, and maybe in future S&P 500. So I think this is the way to go, in partnership with these indexes and with these stock exchanges specifically. I don't know. Obviously, what Robinhood is doing right now is, it's pretty much a pilot phase that's going on. They don't really have a very clear roadmap of where they want to go from here. If they want their own blockchain, if they want to tokenize pre-market, pre-IPO stocks, a lot of unanswered questions here. But from what I'm seeing, I really like what Ondo is doing. So that's pretty much a rundown of what the report covers, in terms of categories. Now I want to talk about a couple of things that actually surprised me, in a good way, obviously. Number one is Benji, the Franklin Templeton fund that they're doing. They have given access to retail, and as long as you are KYC, you can invest anywhere from $20 or higher. That's how it goes. And they already have about I don't know, like $753 million asset under management. This is the Dune page for Benji, their tokenized money market fund, and they have got this $753 million asset under management. So what's most interesting is, as I said, like investors with holdings with like $20 or more, and they have got 858 investors. Stellar has pretty much it's dominated by Stellar blockchain. They have got, like, of the 753 million asset under management, Stellar is doing around $500 million. So that's actually quite interesting, because when we discuss RWAs, Stellar does come up, but not as much as other blockchains come up, like not as much as Ondo, not as much as Chainlink or something like that. But so that will be an interesting thing. But what I want to actually know is, of this 858 investors, are all of these, what percentage of it is institutions, and what percentage of this is retail? And now obviously, like, this is not, I'm definitely not expecting retail to come into with $20 investments, but are we seeing like family offices, or are we seeing individual professionals who are investing $20,000, $25,000 in this market? Because that would actually mean retail validation, and that mean that they are, instead of going through the regular channels, they are actually they have started using a KYC, the permission blockchain sort of category, so sort of platform. So that, regardless, this actually seems to be, because I always assume that these funds will be dominated by institutional investors, and that these will be like asset managers, hedge funds, etc., doing most of the trading. But if we see like more and more retail participating, that's always a good news, you know. So that's number one that really surprised me. Number two is what Plume is doing with their Nest vaults. Nest protocol has got these vaults, and these vaults are all made up of different categories of assets. You have got this stable yield from high quality RWAs. We're looking at like 9.8, which is quite high. A live 30-day UI, 12.27. Again, this is a treasury vault at above 4%. You have got institutional money market funds, etc. And from what I'm seeing in the report, so the NTable vault has drawn about 86,000 depositors, which is again really really interesting to see that this is essentially uh, this is either retail coming in and trying it out. This is obviously also institutional funds coming in and trying it out and seeing like how is it different, is it more efficient, what kind of fees are we paying here, how is it better or worse than the current platforms that we are using. So these are all really really bullish signs that not only is this market growing, but it's getting the right attention from the right people, and it's coming up crazy fast. Just like how we saw the Ondo markets that
Right.
tokenized the stocks, and within 3 days they have got $63 million in TPL. Obviously, when you are talking about it in TradFi scale, 20 $63 million isn't really a lot. It's just a drop in the bucket. But again, this is validations. This validations coming in from from this side and from that side, and so that's definitely something I'm interested in. Yeah, so that's pretty much what I wanted to discuss in this video. Again, these are all signs that the industry is moving in the right direction. We have seen validation not from regulators. We have seen validation from regulators, and when regulators validate your idea, when they think that when they give you the seal of approval, then the businesses and the fund managers and the institutions get the confidence to
Yes.
come ahead and put some play money in. This is not real money. This is not real volume. The real volume comes
Mhm.
after we have gone past the $1 trillion mark. But this is actually it's just now institutions and as well as some individuals trying out and seeing how things goes. And the more these funds come in, we are going to see we are going to understand like what are the plus sides of it, and also where the blockchain breaks. What is something that blocks, what is this demand that, let's say, a blockchain cannot meet? For example, Centrifuge has started using this ERC 7540 token standard, which is actually quite
What
decent.
is that?
It's basically an extension of the ERC 4626 token standard that you use for tokenized and yield bearing vaults. But what's different here is they have added this asynchronous workflow. Whereas, like when you put in active fund managers, you cannot relinquish all of the actions to the blockchain. That an order is placed, an order is filled
Mhm.
immediately. That cannot happen in an institutional environment. So you want to put in some queuing options. Okay, you have put in your request. Now this request will be handled when the other side, the fund manager, or so whoever is handling it, whoever is the owner, whoever is the managing this fund or whatever operation that this is, they review it at their own time, and then they basically approve it, and then you get it done. Because obviously you want everything to be synchronously managed. You want everything to be instantly accessible. But again, like when you are investing